The good news is no one is expecting a market crash or any type of significant declines. The market is simply normalizing.
2019 is upon us, and while news is spread of a shifting real estate market, we wanted to look at a variety of forecasts to see what to expect in the coming year. Overall, 2018 closed as a good year. Sales were healthy. However, the second half of the year clearly showed some softening in shifting sectors of the market. There was a sudden and sharp rise in interest rates, which, although nominal, did seem to have an impact on the overall market. Additionally, we're now hearing that hot markets across the country, such as Dallas and Seattle, are now reporting shifts in their market as well.
Last year, we noticed the shift occurs as market times increased and showings drop. At first, we thought we're experiencing local growing pains due to people leaving Illinois and high tax rates limiting move-up buyers. However, after recent stock market declines, as well as subdued housing figures, show it's clear the real estate market as a whole is normalizing after a multi-year run, meaning that it's shifting in favor of the buyer rather than the seller, or as we've seen more recently, a tug-of-war between a buyer's and a seller's market.
One thing people need to keep in mind about the real estate market is that we're coming off very good years. So when sales decline in comparison to the prior year, it doesn't necessarily indicate a declining market, or even unhealthy for that matter.
Most forecasts for 2019 are calling for weaker statistics in comparison to prior years. However, they are still healthy numbers and the market continues to expand, not contract. The National Association of Realtors forecasts for existing home sales nationwide to be up 1%. Nothing exciting, right? But they also expect prices to rise by 3.1%, not fall. While news headlines show declining sales, prices are still rising and expected to do so in the foreseeable future. Now, local forecasts provide a varying picture depending on the source. Zillow's recent report expects home values in the Chicagoland area to increase by 4.9%, while Realtor.com anticipates a 1.9% decline in pricing. And the National Association of Realtors expects our area to appreciate between 0 and 2%.
One of the best leading indicators for real estate analysis is the levels of inventory. When a neighborhood is inundated with homes for sale, the outlook won't look so good. Conversely, when there are limited homes for sale, we can expect price appreciation. The good thing about this real estate market, both nationally and locally, is that inventory is still relatively low. Here's a chart of homes for sale in the suburbs of Glenview and Northbrook. Although we have seen an increase in homes for sale in the past year, we are still substantially lower than the levels we've seen during the housing crisis. Moreover, the National Association of Realtors still explains that a housing shortage exists in most of the country.
So although inventory, or the number of homes for sale, has gone up, it's clear it's part of the market normalizing from rapid appreciation and recovery to a normal market. Looking at the forecast can be dizzying as there's such a wide variation. There are both positive and negative factors on the horizon. However, the overall economy remains healthy. Unemployment remains at historically low levels, and we live in a major metropolitan area. We're excited about the prospects for the new year. If you've ever heard me talk about real estate, one thing I always say is every year is different. The market continually shifts and evolves, trends change, and seasonality changes as well. Since the first of the year, we've seen an uptick in our showings, and we're getting ready for a busy spring market.
Buying or selling a home is a personal choice. Whether the market is up or down, people always have to move. Maybe it's biology, or maybe it's just your time to move. We are here as your trusted advisor to provide the best service and education so that you can make the best decision for you and your family.
For more information, please call the Schneider Group.